Hi, my name is Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special, and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks that you do, and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over, will get you to cash and out of harm's way. It's very simple from here. It's just sign up, click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now, just click the link below. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, as we look back on last week, it was a fairly erratic week, especially in the small cap stocks. We did see the S&P down 0.8 and the NASDAQ down 0.8. The Russell was down 3%, and this was a big deal. And all of this was predicated on the moves in the interest rates, which I'll address here in just a minute. But as we look at what happened last week, we saw just about everything that was working stopped working. So energy down 7.7%. Financials, including, as I just mentioned, the small cap stocks. So everything rolled over that was working prior to last week. So we did see a shift in the markets. I'm not sure it's a material one at this point, but I do expect to see more nervousness ahead, as we're still looking at a lot of concerns over the interest rates and inflation. We will get some inflation news. The PCE numbers come out on Friday. I don't expect that to be real material, but just looking at this week in general, we do have GDP coming out on Thursday. There's not a lot there. The primary days, I think, from a news standpoint, is going to be on Monday and Tuesday, where we get existing home sales and new home sales. Existing expecting to show 6.5 million in sales, and new home sales around 850, 880, somewhere in those ranges. So those are going to be important numbers to watch as we go through this week. But I believe the sentiment this week will be set around the interest rates, and that's what's going to be focused on. I don't see anything else there really materially that's going to change that. And this also will be reflected in these real estate numbers we're going to be seeing. So expect the market volatility to continue. As I'll discuss here in detail in a few minutes, the technical situation is still looking a little weak. Looks like we're going to test some of these critical levels that I mentioned on Thursday and Friday. I'll go through all the details here in a minute when I go through the technical section. On our database, we didn't see a lot of things happening there. The intermediate database hung in pretty well. There was some moderate rotation, nothing there. Same with the short-term database. There was no real movement there as well. I'll go through all the details here in a minute. So let's go ahead and take a look at the charts, see how they're setting up for this week. As I review the WaveTech database, we'll start with the intermediate. There were approximately 325 buy signals and about 445 sell signals, so it was slightly negative. We're still at 75.5% bullish, but as we look at some of the sectors, we can see a lot of these sectors have moved substantially, and some of them are getting a little long in the tooth, but for the most part, the intermediate trends are still very much intact. We can look at conglomerates is up 30%, consumer cyclical up 57%. This is on an index basis. And so we're into the cycle of these models, but we've got a long ways to go yet. As we look at the daily models, we are at 28.73. We saw basically a neutral to slightly negative rotation. There were 225 roughly buy signals and about 450 sell signals. So slightly negative. The percent bullish is at 28.73. We continue to remain well above that 22% level, and that will be the number I'll be watching as we go through this week. As we go over and look at the position overview, I want to go to the weekly first. The average holding period on the weekly is 201 days on an optimized model. The current duration is about 85. We're about 42% through the holding period, but we look at the average profit right now is around 25. The profile is very extended yet with 84% of the profits being earned, even though only 42% of the duration. And I've discussed this before, that this occurs sometimes when we're in an extended move to the upside, and we've seen such high volatility and returns being expanded over the past year that it appears that this is being reflected in the database. It does concern me that we're nearly 90% of the profits earned. It does set up some vulnerability for a rollover here. If we do see some selling over the next several weeks, that we will remain well above that 62% level, which is a key level on the intermediate database. As I review the S&P 500 futures, we are seeing them trade slightly lower. They were down to the 38.85 level. They're bouncing a bit off of that level, but we're looking at some of the key areas here as far as the moving averages go is at the 21 and 40 period moving averages. Those are at 38.75 and 38.62. As we look at the market grid for today, you'll see that we printed right at S1, 38.85.75, the low 35.85. We're getting a little minor bounce off of here. The R1 number is 39.13 and R2 39.29. The volatility I expect is going to kick up. If we can hold these support levels at the 21 period moving average, 38.75 to 38.62, those are going to be that is going to be the critical level. You can see on the market grid, it reflects those same numbers from a Fibonacci viewpoint as we're looking at 38.70 to 38.55. So if we can get above 39.13, that would trigger a move towards that 39.29. It's possible today with an increase in volatility that we could see an S1, R2, possibility of seeing an S2, R2 if there is some early morning weakness. As we go to the SPX, similar numbers are going to be in play. 38.87 is the 21 period moving average on a daily. 38.74 is going to be key as well. As we look at the market grid for today, you're going to see that S2 38.88, S3 38.74. So those will be the critical levels. Now the concern is that PPM1 is starting to roll over. PPM2 and 3 are neutral, so they really aren't in play, but they're also vulnerable to a penetration. So if we do get a penetration of those levels at 38.74, this will set up a much further decline, and where we'll see that at is we'll go to the weekly chart and look at some of the moving averages. Now we still have some support here with PPM 1 at 0.23 at 38.56. That's the 10-week moving average. This also is a cluster right around the 21-day, 40-day, and the 10-week moving averages are clustered there. If we get through that level, then the next stop is looking at that 37 level, and I don't expect that we're going to get anywhere near that this week. But that was the low. If you go back 3 weeks ago, the low was 37.23 on the cash. That would suggest a retest. But I believe that this 38.56, this cluster of numbers there, is going to be substantial support, and I don't see us getting below that. As we look at the market grid for the week, You'll see that S1 is 38.79, S2 38.41. So once again, a major cluster of support at that 38.40 level. I don't see us getting below that S2 number for the week. On the upside, R1 is 39.46. So on a weekly basis, most likely what we're going to see R1 to an S2 level possible. If we can't get below the S1 number by Wednesday, we could see a little more on the upside. But I think volatility is going to continue to be high as we go forward. The next market that I'll cover is the NASDAQ. As we look at the daily NASDAQ futures, I've been talking about this particular pattern for the last several days. The 21 period moving average is at 12,912.50 right now. It does have a ppm value of 0.25, which is trend mode, suggests that there's only a 40% probability to get above that level. Right now we're trading at 12,883, so we're very close to that number. The pattern that we're seeing, though, does suggest that the 10 period moving average is going to cross over the 21 period moving average. And if this occurs and we close back above these numbers, which is 12,938 for the 10 period moving average, and the 21 period moving average is at 12,912. So if we can get above that level, you can see also R1 would represent that same move at 12,927. So if we get above that level, we'll be looking at least an R2 possibility of an R3. Now this is the daily chart, so you can also notice that the ppm1 is really moving sharply higher with a positive slope of 0.46, which suggests that the market should rise above that number. We have a bit of a mixed pattern here with the 21 down, the 40 is flat, and then the 10 period is up. And typically that short-term average is going to win and suggest that the market's going to go higher. If we take a look at the weekly, you'll see we're trading right on that 21 period moving average, 12,788. The low overnight, 12,788, spot on. We look at the market grid, 12,642 would be S1. That's still a possibility in the pattern. And looking for S1, maybe R2, 13,272. That takes us right back into that number we printed last week and 2 weeks ago, right into 13,002, 13,400 range is going to continue to be major resistance on this market. The next market I'll cover is the 10-year Treasuries. As I said in the opening comments, I believe this will be at a focus this week. We closed at 1.73 on Friday. The PPMs are all very bullish. And the thing that I've been looking for is the potential of going up to the 200-day moving average, which is currently at 1.98. And this will take us right to that 2% threshold. I believe the markets will be very sensitive to the action here. The PPMs are just off the map as far as this intermediate trend goes. Let's back up and go to the daily charts here for a minute, and you'll see that same climb now. We did get an RXT sell signal, which means we should go sideways for a couple of days. So this might be enough to keep the markets, keep the equity markets in check and hold these support levels that I mentioned in the coverage for the equity markets. This pattern that's unfolding, though, is still very bullish, and the primary support level is going to be at the 1.61 to 1.65 level, and a move down to those support levels would probably trigger a reasonable rally in the equity markets. But the PPMs remain positive across the board, which means higher interest rates are still in the offing, and I still expect to see this thing move up over the next several weeks, at least to the 182 to 186 level. Those are the next levels before we get to that 200-day moving average where resistance will exist. The final market that I'll cover tonight is gold. Gold continues to be dominated by this 21 period moving average, which is at 1737.50. As we look at the PPMs, PPM1 is up at 0.32. It's a very similar type formation number that I was discussing in the NASDAQ, in that we have this sharply rising PPM1, and PPM2 is accelerating as well. But the 21 period moving average is still negative here, but it's lost most of its downward momentum. I'm still expecting to see the market remain above the 10 period moving average, 1729.80, the low overnight 1733.60. We look at the market grid for today. S1 is 1737. We've been through that. S2 1729, which maps out perfect with that 10 period moving average. So worst case today, S2, at least an R1, the possibility of an R2. We're going to start to move toward this 40 period moving average at the 1793 level. As we look at the weekly chart, the 10-week moving average is declining at 0.56, so that's going to be major resistance. I've talked a lot about this. If we can get a decent bottom, that's most likely where we're going to head to. As we look at the weekly market grid, R1 1757, next number R2 1773. I'm not sure we're going to be able to get to that level on the upside, but 1757 is likely to be around the high. We've already printed 1749. On the downside, 1730 is S1, so probably an S1, R2 at best as we go through this week. But there's still a lot of negative trends on the intermediate, and there's a ways to go before we set up an ultimate bottom. But I do believe we've seen a price low in this market. This will complete the video for tonight. We'll talk to you tomorrow night. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.